Hello and welcome to Ask for a Trend. I'm Josh Lipton, and for the next half hour, we're breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. Stocks moved lower on Thursday as investors weighed the latest tariff-related news from President Trump, including his new tariff aimed at foreign automakers. Then Robinhood, bringing wealth management and private banking to retail investors. We'll hear from Robinhood CEO Vlad Tenev about the new offering. Plus, from GameStop's move into Bitcoin to SEC pick Paul Atkins pitching a rational policy. It's been a big week for crypto. We'll bring you the very latest. Well, U.S. stocks closed lower after President Trump's hefty new tariffs on auto imports. Yahoo Finance's Josh Schaefer joins us now with the trading day takeaways. Josh.
Hey, Josh. Yeah, so we did have stocks closed lower today after President Trump announced those auto tariffs. But also what I want to highlight, of course, we started to hear about these auto tariffs yesterday, right? And so when you take a look at a 2-day on the S&P 500, you can see that the action really started yesterday about midday when we started to get reports on this news. And then we've kind of just been grinding lower since then. I think if we flip to our trending, if we still have Ford and GM there, you'll see some bigger moves in the specific auto stocks. We'll take a look at General Motors here. Of course, that stock off 10% in 2 days. So the market's not moving quite as much as some of the auto stocks. Same thing with Ford here. But overall, Josh, what strategists were telling me today when I was speaking with them is the move that we saw in the S&P 500 might not be enough. Headed into that quote-unquote Liberation Day next week. It seems like strategists right now still don't feel comfortable with how the market's reacting. Stuart Kaiser highlighted yesterday the move in the S&P 500 in general maybe just says, the market still isn't comfortable with tariffs at this point, so it feels like people still feel uneasy going into next year.
Yeah, I think uneasy, Josh, because you just don't know what's coming. I mean, you've had April 2nd marked on your calendar for a while, and this is reciprocal tariff day, it's Liberation Day, but you don't really, as an investor, you don't know what's coming. Is that going to be some kind of like final day where we finally have this kind of one and done clarity and it's there in black and white and we can move on? Or is it going to be, it's just one more day and what's going to be this sort of just ongoing rolling process?
I think that's the issue, right? Yeah. So I was speaking with a team at Barclays today, both their economics team and their strategy team, and they said, okay, econ team has 15% total tariff rate at this point, which is pretty high, right? That takes us back to the 1940s. But they said, how do we know that we're not getting to 15% in 2 weeks, right? So the issue here being that as Trump sort of rolls out these tariffs, what do other countries do back? How do we respond to that? The tit for tat nature of this, markets just don't feel comfortable with yet, and I don't really know going into most of April if we're going to feel that comfortable with that data point. So it feels like a little bit of a rolling basis. Yeah. Of course, Josh, the word of the day is always uncertainty, right? Well, let's talk about one thing that is uncertain about the U.S. economy. So I was sort of thinking about the fact that we've started to hear a little bit more recession chatter, right? Not consensus call right now, but I've started to ask economists, how do we get there? What is sort of the key to the recession that could happen? One thing they've been bringing up is the high-end consumer. So what you're looking at here is the top 10% earners of the U.S. Look at how much of the spending they do. That's half of the spending in the U.S. economy. This is data from Moody's. And then so when you think about that, so right now the top 10% are half of the spending in the U.S. So what does that mean? Well, if we were to have a stock market crash, I'm talking 20% lower from where we are right now, that might shake this group. So I'm going to flip to our next chart. This is personal savings by income group. Unsurprisingly, look at who's been saving less, right? Their savings rate has been coming down. Again, this is the top income cohort. The question would be, what makes this line keep moving up? If this line moves up, that means high-end earners, high-income earners are spending less. That means companies are then getting less business because that's a lot of the spending. And that would actually probably slow the economy. So I thought that was sort of an interesting catalyst to think about as we start to think about the next few months ahead and what slowing actually looks like.
To your point though, Josh, too, I mean, certainly like on this show, it's not what I hear is anybody's base case still. Right. I mean, the economists who come on here, we had very smart economists on the show today. I mean, I hear a lot of talk about, okay, an economy softening, an economy that's slowing. I haven't heard a lot of, here's my base case, R word.
And I think there's two key reasons for that, right? So we have the jobs report coming next Friday, which we're going to talk about ad nauseum leading into that. But labor market's been pretty solid, right?
Cooling, not crashing.
Right. And that helps your spending. And then you have this wealth effect concept that I'm talking about that also helps your spending, right? These high income earners have been spending. The question would be, do either of those sort of falter and then what happens from there, because those have been the two steady trends since the pandemic, and that's why we didn't go into recession the last couple of years when people thought we would. So that's going to be sort of the things we keep watching. Do consumers keep spending, specifically those high-income folks, and does the labor market stay relatively stable?
All right, we shall. Joshua, thank you. Stick around. Much more Ask for a Trend right on the other side.
Robinhood is taking aim at the world's biggest bank. Some new product launches from the company. Let's bring in Vlad Tenev, co-founder, CEO of Robinhood. Vlad, good to see you. I've followed every one of your product releases over the past year. Each one, I have come away thinking Robinhood is trying to turn into a one-stop destination for people trying to grow their wealth. Take us through what you're trying to do specifically with this banking initiative.
Yeah, I think you put it right. We want Robinhood to be the place where our customers can buy, sell, or hold any financial asset or conduct any financial transaction. And I think we'll do that by offering products that are both extremely simple to use and intuitive, but also have great economics. And that's really what we're doing with Robinhood Banking, as well as Robinhood Strategies and Robinhood Cortex, which you probably know we also announced at the Gold event last night.
You're going up against some titans. You know, I went to our own website, Vlad. I mean, JP Morgan's got almost $700 billion market cap. How do you convince just thousands upon thousands of a JP Morgan clients, Citigroup, Bank of America, to take out their hundreds of thousands of dollars, or if not more, and give it to you?
Yeah, well, the strategy behind our Robinhood Banking product was actually a little bit of a unique strategy. So most traditional neobanks have gone after the low end of the market, the customers that are debit primary. They tend to be living paycheck to paycheck. And we actually saw a gap in the market at the high end. So if you're a high net worth individual and you want a premium private banking experience, but you also want the conveniences of digital banking, there really wasn't a product there. I'd say First Republic probably came pretty close, but now First Republic is gone. And I think that left a gap in the market for a product like Robinhood Banking, where you give high net worth private banking functionality to the mass market at a very compelling price. So you get private banking perks and privileges like access to exclusive events, cash delivered to your home, which is a very innovative feature, by the way, industry-leading APY, 9 times the national average, and an extremely intuitive digital experience. So the team behind the Robinhood Gold credit card actually built this product, and the credit card app is turning into the banking app. And so it has a very tasteful, craftsman-like design, which we're very proud of. So we can't wait for people to try it. Now the hard work actually comes of delivering it to all of our customers and making sure the experience and the service is great. So the work doesn't stop, as you know.
Do you want to become a bank?
Well, in terms of, we're definitely offering banking services to customers. In terms of actually getting the national bank charter, it's a road we've been down in the past. So we actually had filed back in 2019 for a national bank charter, OCC regulated, and we pulled back on that process because at the time, and we still believe this is the case, the costs of actually becoming a national bank outweighed the benefits. And we have actually had success partnering with some great banks, Coastal Community Bank, which is powering the credit card and the Robinhood Banking product, as well as a bunch of other large banks that we partner with for our high yield cash sweep offering for Robinhood Gold members. So we partner with banks. We've been successful with that. They offer a lot. We've also been down the national bank charter path before, so we know exactly what that looks like. At this point, I'd say we're happy with the partnership path, but we're open to it, and if the benefits do outweigh the costs at some point, I think we'd be able to pivot quickly.
What do you say to those that say, we've never heard of Coastal Community Bank, I don't know if my money's safe?
Well, I mean, banks in the U.S. are held to a very high standard. They're highly regulated. Coastal Community Bank's a great institution. And I think it's really a combination of two things. Like, they take care of the banking stuff and all of the actual banking services, which are very, very important. But we also provide the technology and the service and, you know, the user experience, as well as stitching together all of the actual private banking functionality. So I think we've worked very well together on the credit card, and we're excited to kind of expand this a little bit more.
So I watched your event, Vlad, and I saw you on an app. You tipped $7. You ordered $200. And this Uber-like thing came up and suggested that they were going to deliver you your money. One, how safe is that? I mean, what, you have someone coming to you with your own money? And then number two, why do we need that in this digital era?
Yeah, great question. Going to an ATM is not a very safe experience. And actually, if you remember the talk, the statistics are staggering. I mean, particularly in San Francisco, between 2019 and 2022, ATM crime went up hundreds of percent, 600% increase in ATM crime. So I think this is one of those things, cash delivery, that doesn't exist right now. So I think it'll take some time for people to get comfortable with the concept. But if you think about it from first principles, going to an ATM where you have to worry about skimmers, people looking over your shoulder, people following you, especially if it's late at night or you're in a big city, is actually concerning to a lot of customers. And even though, you know, the economy is moving digitally and a lot of payments are going digital, which of course we support with a variety of means, you still need cash. Something like close to 20% of payments in the US are still cash payments. So it's going to be important for a while. And customers are already used to doing on-demand delivery for things like iPhones and iPads. We anticipate the average ticket size for a cash delivery transaction to likely be in the low hundreds of dollars. So even though it seems like an unfamiliar thing, people are doing very, very similar things with much larger amounts and having them delivered. And you're comparing it against going to an ATM, which is in particular, not the safest or most pleasant experience, unfortunately.
Let's be honest, Vlad. When I saw you doing this, I'm like, I've never had money delivered to me. I mean, I'm open to it. I've never seen it before. Before I let you go, Vlad, does it frustrate you that you can't, not that you can't, but so many folks still view Robinhood as meme stocks? You've made such a huge pivot the past year plus, so many new products. Do you think you will ever be able to shake that view of the company?
It's funny, you know, when I'm in these interviews, we cover such a wide range of topics, right? And we didn't even talk about Robinhood Strategies, which is our new digital advice offering. So I would say back in 2022, Robinhood had fewer dimensions to it. I mean, we hadn't really invested in our active trading business. We were sort of newly in crypto, so it was mostly investing in individual stocks. But now we have banking, we've got strategies, we've got prediction markets, which we're getting into in a bigger and bigger way. So the business is diversifying, which gives me more to talk about. So I'd say I'm not worried. What I'm focused on is providing customers with value, providing them with choice and different ways to manage their money, and building out a diversified business to help customers with all their financial needs. And I think we're making good progress, but there's a lot to do.
Hey, Vlad, last time I talked to you about a month and a half ago, you came on my podcast, Opening Bid. Different time in the markets. What have you seen in the business since we last spoke? I mean, markets hit lows, some short-term lows at the end of February, very volatile conditions because of all things tariffs.
Yeah, I mean, we've been through so many ups and downs with the markets, the enthusiasm right after the election, now uncertainty with tariffs. Our customers tend to be invested heavily in names that are at the frontier of innovation. I mean, people are buying cryptocurrencies, they're buying electric car companies, they're buying stocks of artificial intelligence companies. And I think we're seeing that continuing. We publish statistics of our most traded names, and it's been consistent. It's been the names at frontier innovation industries like NVIDIA, Tesla, and some of the others. So by and large, when we have big dislocations and the market's trading down, customers tend to buy up and see it as an opportunity to get into these names at a discount, because despite conventional wisdom, most of our customers are in it for the long term. Like they're interested in the long-term prospects of these companies. And then of course you have active traders looking to capitalize using different strategies. But the equity investors tend to be long-term bullish on innovation.
And now all these folks, Vlad, can take their big gains and have it delivered right to their house, maybe with a sandwich or an acai bowl. Vlad Tenev, co-founder and CEO of Robinhood, always nice to see you. We'll talk to you soon.
Thank you. Always a pleasure.
All right, appreciate it. All right, Josh, back to you in the studio.
Thank you, Brian. It has been a busy week in the crypto world, from GameStop confirming its plans to get into crypto to President Trump's SEC pick, Paul Atkins, promising a new approach to digital tokens. And joining us now to break it all down is Ben McMillan, IDX Advisors Chief Investment Officer. Ben, great to see you as always.
Thanks for having me.
So let's start out with Mr. Paul Atkins, Trump's man to run the SEC, because he's before the Senate and he pledges, Ben, rational crypto regulations. As a guy who's working in the industry, what would you want to see from Atkins, and what would you expect to see?
I mean, the word rational is an important one because, frankly, when you look at the previous SEC administration, it was one that even other regulatory agencies accused of being inconsistent with their application to crypto agencies, over heavy-handed, and it stifled a lot of innovation in the space. I mean, Coinbase was a perfect example. They went online and said, here the SEC, under Gensler, approved our IPO, but then is also suing us. How can you have one or the other? And so to just move into a rational approach, a common sense approach, is very favorable, I think, for the space in general, because there's a lot of pent-up innovation there. And I think just the language around that is going to really offer us a catalyst to see higher prices, not just for Bitcoin, but a broader adoption of the ecosystem.
So the lighter touch, which is what we would expect to see, that has these kind of tailwinds and benefits for innovation, for example.
Absolutely, because a lot of people, and we were talking to them, were just kind of rolling back projects because they were worried about the heavy-handed approach of an SEC. And so again, there's a lot of innovation out there. There's a lot of exciting things out there on the crypto landscape. And so having an SEC that's more conducive and more cooperative and going to allow that innovation is going to be great for the space.
Generally, what do you think the team Trump has put together here? Do you like this team? I got Atkins, I got, of course, David Sachs, the crypto czar. What do you think?
I think it's great because they're guys with private sector Wall Street experience. So again, they're coming in, and I forget who it was, but one of them said, the SEC's job is to really prevent outright fraud. So we're going to go back to, guys that are doing things like pump and dumps, stealing money from widows and dentists, for lack of a better term, as opposed to just kind of, inconsistently going after these, big headlines. And so again, getting back to like a bricks and mortar type approach, I think is going to be really good for the crypto space.
Let me ask you about another storyline in your world. GameStop, which got nailed today, they announced these plans to sell $1.3 billion in convertible bonds to fund Bitcoin purchases. What did you make of that?
Yeah, I mean, it's interesting. I think we'll see more of that in general. Corporations putting Bitcoin on their balance sheet. There was a lot of talk about that years ago. Actually, Tesla was one that did it, and people thought that was going to usher in. I think now there's more of a normalization of that, and we're hearing more about that. And frankly, BlackRock starting to put Bitcoin in their model portfolios, I think, has been a big catalyst, kind of normalizing that idea. Now, the flip side, of course, it is, GameStop is, kind of famously known as that meme stock. To what degree was this done for headline grabs and things like that? I think that's why the price is responding the way it is. But generally, that type of movement, I think, is favorable. And I think we'll see it with countries too. I think we'll start to see, similar to El Salvador, more countries using Bitcoin as a kind of easy turnkey way to shore up their own central banks. So again, that's another positive catalyst.
Let me get a broader question for you. Looking at Bitcoin, we're still roughly been 20% below that record in January. What are the catalysts to get Bitcoin working in the right direction again that you see coming?
So the big one is just getting through these macro headwinds. Bitcoin is trading like a high beta asset. If you look at a chart of Bitcoin relative to NASDAQ, it looks exactly like that, a high beta version of the NASDAQ. And so the same headwinds that are kind of taking risk off the table pretty much indiscriminately over these last couple of weeks, the tariff talks, the uncertainty.
Trump comes out, talks tariffs, everybody goes risk off.
Exactly, exactly. And Bitcoin is the canary in the coal mine there. Now that said, Bitcoin has been stabilizing kind of in the 80 to 90,000 range, which I think is good. We've started seeing on-chain evidence. The nice thing about Bitcoin is you can look on-chain and see what types of wallets are buying. And so you've got the so-called whale wallets starting to accumulate here. We're kind of past the liquidations. So technically, that's a very constructive setup. Once we move into kind of less uncertainty, like I said, those aforementioned catalysts with just a more friendly SEC and all the innovation, I think it's hard to see how Bitcoin isn't setting all-time highs. Maybe not this year, but certainly in the following years.
All right, Ben, always great to see you, especially on set. Thank you, sir.
Thank you.
Now, President Trump's auto tariff set to take effect next week. We're going to be looking at U.S. auto sales from all the major automakers in our chart of the day. Stick around, much more as for a trend that is right on the other side. Ben. President Donald Trump announcing 25% tariffs on all cars shipped to the United States. We're looking at U.S. sales for all the big automakers in our chart of the day. Yahoo Finance's Julie Hyman joins me now with a closer look. Julie.
The big question, of course, when it comes to all these tariffs is how exactly will they affect the automakers differently? Who will be more affected, less affected when they go into effect as expected next week? Well, Bank of America Global Research, using some data from Wards, kind of came up with a breakdown of how much of each automaker's U.S. sales are from cars that are made in America. So here's a breakdown here. Bear with me. I'm going to go through here one by one. So Tesla, Rivian, and Lucid, all three of those effectively make all of their vehicles in the U.S. Obviously, Tesla sells a lot more cars than Rivian and Lucid, but even though Elon Musk said in a tweet that yes, we will be affected by these tariffs, perhaps on the margin by some of the parts that they might be importing, by and large, the whole cars are assembled here in the United States. Then you have Ford here. The green line is made in the USA. Then you've got Canada and Mexico here in pink, because obviously there could be a tariff hit related to those as well. And then the rest of the world in blue. Stellantis here, you get a little bit more made outside of the US. And then General Motors, a little bit more, sort of more 50-50 U.S. and outside of U.S. That's also relevant because General Motors, if you saw how the stocks did in today's session, was hit much more than shares of Ford. But of course, there are a lot of other automakers here, so just wanted to quickly scan through the rest of them here. A lot of the Asian and European automakers here. You've got Honda, Subaru, Toyota, BMW, Renault, Nissan, and Daimler. All of them sort of at 50-50 or thereabouts. So these also could be relatively heavily tariffed if indeed all of this comes to pass. You've got Hyundai on here. Of course, Hyundai's proportion is going to change at least over the next few years if it indeed invests that $20 billion on building out production in the U.S. as it has pledged to do. VW here, Mazda. And then you've got Geely, which it's not a brand name in the U.S., but it does make Polestars, among other cars. And then you've got Tata Motors of India, which again, not a household name, but it makes Jaguars, which are then imported into the U.S. So those two don't really make many cars, if at all, in the United States. So that's something to keep an eye on as well. So that's sort of the granular automaker by automaker. Of course, earlier you and I talked to Daniel Ruska of Bernstein, and he gave the bigger picture of what the tariff hit is going to be.
So if we just calculate what is the cost of the tariffs if we would have continued 25 as planned, the cost is $110 billion or $6,700 per car. So very clearly, this cannot go unmitigated. And so the next step then is to figure out who will raise prices and who will actually pull back volumes in the US market.
However you slice it, it's going to be a big deal for a lot of these automakers, Josh.
All right, thank you, Julie. And that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.